Have you ever wondered why, no matter how hard you work, your finances still feel like they're going nowhere? Chances are you're not just working against the numbers. You're working against myths. Myths that have been passed down for generations and are silently keeping millions of Filipinos from reaching their full financial potential. Today, we're breaking the cycle. We'll tackle the biggest financial myths holding you back and reveal the truth that could finally set you free. Welcome back to Thrifty Finance Vision PH. Here, we don't just talk about money. We talk about how you can use it to build the life you deserve. If you're ready to challenge what you've always believed about money and take the first step towards smarter financial decisions, then stick around. This video is for you. From the idea that all debt is evil to the belief that you need to be rich to invest, we're uncovering the truth behind these common myths. Debt. It's a word that gets a bad rap. How many times have you heard someone say,
"Huwag kang magkautang, mapapahamak ka lang."
While it's true that debt can lead to financial struggles, not all debt is created equal. Let's break it down. There's such a thing as good debt and bad debt. The problem is, most Filipinos are only familiar with bad debt, the kind that leaves you with higher interest rates like credit card debt or payday loans. Bad debt occurs when you borrow money to fund things that depreciate in value, things that don't help you build wealth, like going on a shopping spree or buying a new gadget you don't really need. But here's the truth. Good debt can actually help you grow wealth. Take housing loans, for example. When you take out a home loan, you're investing in something that can appreciate in value over time, your home. And with historically low interest rates, real estate can be a great long-term investment. Another example, business loans. If you borrow money to start or grow a business that generates income, that's an example of good debt. You're using borrowed money to make more money. So, let's put it into perspective. A housing loan can help you own property, while a business loan can kickstart your entrepreneurial dreams. Both of these are investments in your future. The key is managing your debt-to-income ratio. As long as you're using debt to invest in things that grow in value or generate income, you're on the right path. Just make sure to avoid falling into the trap of high-interest debt that doesn't help you build wealth. Remember, debt itself isn't the enemy. The way you use it is what matters. How many of us have looked at the stock market or investment opportunities and thought, investing is only for the rich? It's one of the most common myths I've heard, and it's stopping so many Filipinos from building wealth. But here's the truth. You don't need millions to start investing. In fact, some platforms today let you invest for as little as 50 pesos. Yes, 50 pesos. Platforms like G-Invest, Seedin, or even your regular banks allow you to get started with just a few hundred pesos. With these digital tools, anyone can start investing, no matter their income level. Let's say you start with just 1,000 pesos a month. Over time, even with modest returns, that money can grow, and you'll begin to see the power of compound interest working in your favor. Let's look at an example. If you invest 1,000 pesos every month in a balanced fund with a 7% average annual return, after 10 years, you could have over 170,000 pesos. That's the power of starting small and letting time work for you. And the best part? You're not just putting your money in a savings account where it's slowly being eaten up by inflation. You're growing your wealth. Now, don't get me wrong. Investing does involve risks. The stock market goes up and down, but by investing in a variety of assets like stocks, mutual funds, or even ETFs, you're spreading out the risk. Start with what feels comfortable. Whether it's a low-risk bond fund or a higher-risk stock fund, there's something out there for every risk appetite, even if you're just starting out. So, stop waiting to be rich to invest. The truth is, you can start today with whatever amount you're comfortable with. And as you continue, your wealth will build. The richest people didn't get there by waiting. They got there by making their money work for them. And you could do the same, starting right now. The stock market is too risky. Sound familiar? This myth is one of the biggest reasons why so many Filipinos stay away from the stock market, thinking it's only for gamblers or those willing to take big risks. Yes, the stock market can be volatile. There's no denying that. But here's the thing. Risk isn't the same as danger. The real risk comes from not investing, not from investing itself. While the market may go up and down in the short term, history shows that over the long term, the stock market has always provided positive returns. The key is to invest for the long run and diversify your investments. Instead of putting all your money in a single stock, a diversified portfolio spread across different sectors or industries can significantly reduce your risk. Think of it as not putting all your eggs in one basket. You don't have to be a day trader to make money in the stock market. In fact, if you invest in a broad market index fund, you're already diversifying your risk by owning a small part of many companies. The PSEI has experienced fluctuations over the years, reflecting the overall health of the Philippine economy and global market trends. Investors need to consider both the risks and rewards when investing in an index like this. Even with the occasional market dip, a diversified stock portfolio tends to outperform traditional savings over the long term. Plus, the dividends you earn from stocks can provide you with extra income along the way. So, while the stock market may seem risky, it's actually one of the best ways to grow your wealth if you do it the right way. Start small. Invest in index funds or mutual funds that track the market. As your confidence grows, so will your portfolio. The biggest mistake you can make is sitting on the sidelines, watching others grow their wealth. Don't let fear of volatility stop you from investing for your future. How many of us have avoided investing because we thought we needed to be experts, that we needed to know everything about the stock market, bonds, or real estate before we could even think about putting our money in? Here's the truth. You don't need to be a financial expert to start investing. In fact, the majority of successful investors today aren't experts. They're just people who took the first step and kept it simple. Thanks to technology, investing has never been easier. You don't have to spend years studying financial statements or learning complicated investment strategies. Take robo-advisors, for example. These apps use algorithms to help you create a diversified portfolio based on your goals and risk tolerance. All you need to do is answer a few questions, and you're good to go. Robo-advisors take care of the hard work for you, so you don't have to be an expert to make smart, informed investment choices. And it's not just robo-advisors. You also have index funds and mutual funds that provide built-in diversification. These are perfect for people who don't have the time or the desire to become investing gurus. By investing in these types of funds, you're essentially buying a slice of the entire market. So, even if you're not an expert, your money is being spread out across many companies, reducing risk and increasing potential for growth. Investing doesn't have to be complicated, and it doesn't have to require expert knowledge. The key is getting started and doing it in a way that makes sense for your own goals and lifestyle. So, don't wait for the perfect moment when you know everything. Start now. As you go along, you'll learn and improve your strategy. Just remember, the best time to start investing was yesterday. The second best time is today. Many Filipinos believe that once they start earning a high salary, financial problems will disappear. That with a six-figure paycheck, wealth is inevitable. But here's the truth. Earning more money won't make you rich if you don't know how to manage it. Let's get one thing straight. A high salary is helpful, but it's not a guarantee of financial success. We've seen countless celebrities, athletes, and even lottery winners who made millions but still ended up broke. How? Because income alone doesn't create wealth. Financial discipline does. The problem isn't how much you make. It's how much you keep and how well you grow it. One of the biggest traps high-income earners fall into is lifestyle inflation. The idea that as your salary increases, your spending should increase too. You move into a high-end condo, start financing a new car, upgrade your gadgets, and eat out more often. Before you know it, your expenses have grown just as fast as your income, leaving you with nothing to save or invest. And the worst part? This cycle continues. Because the more you earn, the more you feel entitled to spend. It becomes harder to downgrade once you've gotten used to the high life, even when your financial situation changes. So why do so many high-income earners still struggle financially? Here's why a high salary alone won't make you rich. They don't save or invest. No matter how big your paycheck is, if you spend everything and don't set money aside, your wealth won't grow. Wealth is built through saving, investing, and compounding over time. They rely on one income source. A high salary can disappear overnight. If you lose your job, get sick, or your industry takes a downturn, having just one income stream is risky. The wealthy build multiple income sources, investments, businesses, or passive income streams. They spend everything you make. If your expenses match your income, you'll always live paycheck to paycheck, whether you earn 20,000 pesos or 200,000 pesos a month. At the end of the day, a high salary is just a tool. If you don't manage it well, it will disappear. But if you save, invest, and spend wisely, you can turn even an average income into lasting wealth. So, what does it really take to become wealthy? It's not just about how much you earn, it's about how well you manage and grow your money. Here's what actually builds wealth. Living below your means. The richest people aren't always the highest earners. They're the ones who know how to control their spending. Even Warren Buffett, one of the richest men in the world, still lives in the same house he bought in 1958, saving and investing consistently. Even if you earn a lot, if you don't invest, you'll always be working for money. The goal is to make your money work for you through stocks, real estate, or business. Building multiple income streams. Many successful Filipinos don't rely on just one paycheck. They start businesses, invest, or create side hustles to make sure their money continues to grow. At the end of the day, a high salary is just a tool. If you don't manage it well, it will disappear. But if you save, invest, and spend wisely, you can turn even an average income into lasting wealth. Many Filipinos believe that insurance is just an unnecessary expense, that it's something you can live without, especially when you're trying to save money. But here's the truth. Insurance is not just another cost. It's a critical financial safety net that can protect you and your family in times of need. Imagine being involved in a car accident or facing a major health issue, or even the loss of a loved one. Without insurance, these unexpected events could drain your savings or put you in deep debt. In the Philippines, medical expenses can be sky high. For example, the cost of a hospital stay can easily reach tens of thousands of pesos. Without insurance, you might find yourself struggling to cover those costs. Life insurance, for example, is not just about preparing for the worst. It's about ensuring that your loved ones are financially supported if something happens to you. It's a way to protect your family from the financial burden of your absence. And here's the thing. Insurance doesn't have to break the bank. There are affordable options, such as term life insurance, which is designed to give you coverage for a set period without draining your savings. Some insurance plans are as affordable as 500 pesos to 1,000 pesos a month. That's a small price to pay for the peace of mind it brings, knowing that you have financial protection when you need it most. Think of insurance as an investment in your well-being. It's not just a cost. It's a way to protect your future, manage risks, and prevent financial setbacks. While it might seem like an extra expense now, the financial protection insurance offers can save you from far greater expenses down the line. The real cost of not having insurance could be a financial disaster that sets you back years. So, the next time you think insurance is just an unnecessary expense, remember, it's one of the smartest ways to protect your health, your family, and your wealth. Many Filipinos have been led to believe that real estate is the best investment option. After all, property can appreciate in value, right? But is it really the best investment for everyone? Real estate has long been viewed as a secure and profitable investment. But the truth is, it's not always the best option for everyone. While it can be a great choice in some situations, there are important factors to consider before diving into property investment. First off, purchasing real estate comes with high upfront costs, down payments, taxes, transaction fees, and maintenance. This is money you'll have to commit for the long term. Now, compare that with other investments like stocks, mutual funds, or even peer-to-peer lending platforms. These options allow you to start with much less capital and have more flexibility in how you invest. One of the major drawbacks of real estate is its low liquidity. If you need to access your money quickly, selling property can take months, and you may not get the price you're hoping for. But with stocks or bonds, you can sell and access cash almost instantly. Take the stock market, for example. Over the long term, the Philippine Stock Exchange has shown steady growth. Investing in index funds or blue-chip stocks can yield significant returns without the headaches of dealing with property management, taxes, or maintenance costs. Stocks also offer diversification, meaning you can invest in a variety of companies across different industries, spreading your risk. Real estate, on the other hand, is concentrated in one asset, property, and don't forget about the high opportunity costs. Money tied up in property is money that isn't working elsewhere. It could be invested in opportunities that generate returns faster, like stocks or mutual funds. While real estate can appreciate in value, it may not outperform other investments, especially when you factor in inflation, property taxes, and maintenance costs. For example, some well-performing stocks have outpaced the growth of real estate in certain periods. Real estate isn't a bad investment. In fact, it can be a great choice for building wealth long-term, especially for those who have the capital and are looking for something stable. But it's important to remember that it's not the only or necessarily the best option for everyone. Smart investors know that the key is diversification. Real estate can be part of your portfolio, but it shouldn't be your only investment. Balance it out with other assets that offer liquidity, growth potential, and lower costs. So, when you hear that real estate is the best investment, take a moment to think about your financial goals, your risk tolerance, and your investment strategy. For some, it might be the perfect fit, but for others, there are better options out there. As we wrap up today's discussion, let's take a moment to revisit the key myths we've debunked. We've learned that financial success isn't about making more money. It's about making smarter choices with what you have. Whether it's thinking that you need a high income to invest, or believing that insurance is just an unnecessary expense, these myths can hold us back from achieving financial security. But now you know better. Financial freedom is built on knowledge. The more you learn, the better equipped you are to make decisions that will help you grow your wealth and secure your future. It's important to challenge these myths and be proactive about your financial education. There's no one-size-fits-all approach to personal finance, but by debunking these misconceptions, you'll be better able to chart your own path. Of course, these are just some of the financial myths holding us back. There are plenty more out there, and we'll tackle them in a future video. So make sure to stay tuned for that. If you found this video helpful, don't forget to like, share, and subscribe. And feel free to share your thoughts or any financial myths you've encountered in the comments below. Let's keep the conversation going. Thank you for watching, and we'll see you in the next video.